would have imagined that a delay of just a few days could nearly bring India's financial system to its knees. It was September 2018. The Sensex was near all time highs, credit markets were booming, mutual funds were flush with liquidity. India's infrastructure dream seemed unstoppable, powered by a company that few outside financial circles even knew existed: Infrastructure Leasing and Financial Services, or IL&FS. For 3 decades, IL&FS had been the quiet workhorse behind India's highways, ports, and power plants. It wasn't flashy, it didn't make headlines, but its reach was vast and its reputation spotless. It was rated AAA, backed by institutions like LIC, SBI, and Oryx of Japan, a company too respected to fail until it did. Welcome to India Business Insights, where we decode the biggest events shaping India's economy and business landscape. Here, we do not just tell stories, we connect the dots between finance, policy, and corporate power. So, if you want to truly understand how India's markets move, make sure you subscribe and stay tuned. Now, let's dive into how one delay in repayment by IL&FS, a company once hailed as the backbone of India's infrastructure, spiraled into the country's biggest financial crisis. The first crack, a few days delay. It all began with something seemingly a small delay. In June 2018, one of IL&FS subsidiaries, IL&FS Transportation Networks, delayed repayment of about Rs 450 crore owed to SIDBI. A short delay, a few days late, nothing unusual, the world of long term infrastructure finance. But what followed changed everything. Credit rating agencies, ICRA and CARE downgraded the debt. Investors panicked. Mutual funds that had parked thousands of crores in IL&FS papers began to fear contagion. And suddenly, whispers started to spread through the financial world. If IL&FS is struggling, who else is next? That was the spark. The cracks widened from calm to chaos. By July 2018, cracks within the empire were widening. Ravi Parthasarathy, the charismatic founder and chairman of IL&FS, quietly stepped down after 3 decades, citing health reasons. Few realized at the time that this was the first sign of the storm building beneath the surface. In August, IL&FS Financial Services defaulted on commercial paper worth hundreds of crores. It repaid after a few days, calling it a temporary mismatch. But in finance, perception is everything. The market had sensed weakness. The domino effect, panic in the markets. Between September 10th and 20th, panic set in. IL&FS announced it had dues of over Rs 16,000 crore pending from government agencies. It promised asset sales, rights issues, and restructuring. But confidence, once broken, doesn't return so easily. On September 15, the government appointed SP Mathur, a former LIC chairman, as interim head to calm nerves. But by then, the contagion had already reached the markets. On September 21, DSP Mutual Fund, holding IL&FS and other NBFC debt, sold off commercial papers of DHFL at record yields. This triggered a chain reaction. The Sensex fell over 1,500 points in a single day. It was no longer an IL&FS problem, it was a system wide liquidity crisis. The day the music stopped. By September 25, the situation was spiraling out of control. IL&FS tried to reassure investors it would raise Rs 4,500 crore via a rights issue and sell some assets. It also brought in restructuring experts from Alva Reyes and Marshall to help manage its debt mountain. But the trust deficit was total. On September 29, IL&FS held its annual general meeting. The board approved the rights issue and expanded borrowing limits. But no one wanted to lend anymore. By September 30, mutual funds were seeing heavy redemptions. Liquid funds, normally the safest category, were bleeding. The RBI called an emergency meeting with major shareholders, worried that IL&FS could trigger a collapse similar to Lehman Brothers a decade earlier. And then, on October 1, the Indian government took the unprecedented step. It superseded the IL&FS board through the National Company Law Tribunal and appointed a new one led by banker Uday Kotak. The web of deception. When the new board began digging, they discovered the true horror of IL&FS structure. The group wasn't one company. It was a labyrinth of more than 300 entities, many of which had borrowed from one another. Funds were shuffled internally to pay older loans, classic evergreening. On paper, the parent company, IL&FS Limited, looked stable, but its subsidiaries, especially in infrastructure projects, were drowning in debt. The balance sheet had been a mirage. For years, management had reported profits while the subsidiaries bleed losses. After the government's intervention, auditors were ordered to recast the accounts. The result was staggering. What was once shown as a profit in FY 2018 turned out to be a massive consolidated loss when the books were reopened. In fact, fewer years, the company has reported a PAT of rupees 584 crores for FY28, but after the accounts were recast, it had turned into loss of 7,530. In fact, each of the previous 5 years now reported a loss as against yearly profits of around 300 crores in each of these years. The Serious Fraud Investigation Office later concluded that senior management, in collusion with auditors from Deloitte and BSR, had deliberately concealed the financial rot. In fact, the Institute of Chartered Accounts also found them guilty. The numbers behind the collapse. By the time the truth surfaced, the scale was terrifying. IL&FS had rupees 99,000 crore in total external debt. Of this, over rupees 57,000 crore was owed to public sector lenders, banks, insurance companies, and mutual funds that had the savings of millions of Indians. That meant every Indian taxpayer was indirectly footing part of the bill. IL&FS debt represented nearly 10% of the entire banking sector's exposure to NBFCs. At its peak, the group had more than 250 subsidiaries, joint ventures, and associate companies, each with its own borrowing, guarantees, and cross holdings. The aftermath, government control and resolution. When Uday Kotak's board took charge, they faced the impossible task of stabilizing a systematically important institution that had imploded overnight. They began by classifying all entities into three buckets: green, solvent; amber, partially solvent; and red, insolvent. Out of 302 total entities, nearly two-thirds were either insolvent or stuck in litigation. The new board began selling assets, negotiating settlements, and creating infrastructure investment trusts to monetize viable projects. By March 2025, the numbers look far better. 197 entities resolved, rupees 45,281 crore of fund-based debt discharged, recovery rate around 61%, far higher than initial estimates. Lessons from the IL&FC collapse. The IL&FC crisis was a wake-up call, a reminder that opacity can be deadlier than debt. It forced regulators to re-examine the entire NBFC sector. The RBI tightened liquidity coverage norms. SEBI introduced stricter rules for rating agencies. Auditors faced bans and legal proceedings under Section 447 of the Company Act for fraud. The MCA strengthened oversight of independent directors. But beyond the regulations, the biggest lesson was about trust. Reflections: the price of trust. The story of IL&FS isn't just about numbers, it's about how trust, once broken, can ripple through an entire economy. A company that financed India's dreams ended up shaking its foundations. It showed that when corporate governance fails, even the most sophisticated systems can crumble. It reminded us that rating symbols and annual reports mean little without integrity behind them. Also, it is surprising that a board with high quality professionals and retired bank chairmen could not see the accounting issues. And it proved that in modern finance, even a few days' delay, if left unchecked, can spark the biggest financial crisis in the nation's history. It also highlighted the need for boards to be financial literate and be more diligent. How many of the independent board members have the time and the skill to read an annual report? We review in depth annual reports of listed companies for several large investors. In case you are an independent director in the listed company, we would be happy to help you understand the annual report of your company. If you found this story insightful, don't forget to like this video, subscribe to India Business Insights, and share it with others who follow India's economic journey. Because understanding the IL&FS collapse isn't just about looking back, it's about learning how to protect the system for the future. This was India's biggest financial crisis, born not from greed alone, but from silence, delay, and denial.